All right, so another crazy week in the markets. Stocks hit an all-time high. Bitcoin hit an all-time high. So we got lots to talk about. First things first, if you get value out of the video, please like and subscribe. Check out the links below. So first thing I wanted to bring up here was the PPI news. Now, the CPI news came in softer than expected or lower than expected. The PPI came in higher than expected, and the bad thing was significantly higher. And this is concerning because the PPI typically feeds into the CPI because this is the price that businesses, producers, are paying for stuff. So this is concerning. I mean, we're still very likely to see a cut in September, but for all we know, they use this as an excuse not to cut. Now, again, whether or not they should be cutting or not it's kind of irrelevant. I think they probably should, just because the economy clearly has weakened. But this is certainly concerning. And this very well might mean that the second and possible third cut that is expected may not happen. So this is definitely concerning. I think that a lot of this is due to the tariffs, and it probably goes away, but we don't know for sure. We really don't know for sure. And something that I don't think enough people out there are taking into account when they go about their day-to-day lives or their investing is people discount inflation when it comes to investing, right? You always hear people say, "Oh yeah, I can get a guaranteed 3-4% return on bonds or GICs or CDs, whatever it is," and people don't seem to realize it's inflation's running at 3, 4, 5% per year, right? So if it's running at 5% per year, which when you look at real inflation, we're talking broad money supply growth over time, it's actually about 5-6%, right? That's the long-term average. So you're getting 4%. You're actually losing money. You're not gaining money, right? So this is a big mistake that people make. And the reason that they can give you a guaranteed rate is that they know that it's overwhelmingly likely that they can get a better return somewhere else, right? And loan you the lower rate, right? So just a little rant I wanted to bring up there. The next thing here is NVIDIA now accounts for 8% of the S&P 500, highest weighting of any stock in the index's history. Now, you also have to keep in mind that the S&P hasn't been around for that long. But the big question here is it now time to sell stocks or to short, to buy put options? My answer is always going to be the same, right? It's always going to be the same because even though the market obviously is overvalued, right? NVIDIA obviously is overvalued. The market, again, as the old saying goes, the market can stay hysterical longer than you can stay solvent. So if you try to play these games of selling and going to cash or shorting or buying put options, and I'll give you an example, right? If I told you that NVIDIA is going to be $250 a share 6 months from now, the S&P will be at over 7,000, is anybody going to be like, man, that's so unlikely, I don't believe it? Virtually nobody's going to say that, right? So this is why you don't, it's not a good idea. Yeah, it can work sometimes, but on average, it's just not going to work. It's just not a good idea. My strategy, buy the indexes, change that around a little bit depending on how expensive you things are. Buy stocks that you think are undervalued and go on with your life, right? Because, again, the data is very overwhelming. Trying to time the market is a terrible idea, right? It's a terrible idea, and even the professionals struggle to do it, right? Even the professionals struggle to do it. So that's why I don't think it's a good idea. NVIDIA, clear example of an overvalued stock, but again, it can the market can stay irrational longer than you can stay relevant. I mean, look at the bull case here, right? The Fed is more than likely. I mean, they're still doing a little bit of QT, right? If they end QT and maybe they even do a little bit of QE, that arguably is more bullish for, at least for the stock market, than cutting rates. right? So because that will increase liquidity, right? And that typically correlates with your more growthier, frothier names doing well. So the Fed probably is going to be cutting rates. QT probably is coming to an end. That signals bullish, right? That signals bullish. The market's overvalued, so that signals bearish. But again, trying to predict this stuff is just way too hard. And again, if you're buying stocks and you're doing it consistently over time, do you care about like 10 or 20 years from now? Nobody's going to care whether you bought when the S&P was at 6,000 or whether it was at 6,400, right? You're not going to care. You're going to care that you have more shares. So that's my thoughts on that. The next thing is the Bitcoin news. So this was a crazy week for Bitcoin. A handful of things happened. The first thing that happened was Bitcoin hit a new all-time high. It immediately corrected back down to about 117. It's since held. We'll see if it stays that way. And something that does make me very bullish for Bitcoin that I did bring up last week, it did hold that previous all-time high of like 112 roughly. So if we can hold that, I think we're bullish. I think we're bullish. We did hit a new all-time high, and there is a lot of short activity right around 125. So if we can break 125, we'll probably break 130. We could break 130 the same day. So I think that there's a lot of shorts right around that area, and it's just going to be hard to break through. I think it's going to be similar to 100,000. It's going to be one of those things that it's going to be hard to break through, but when it does break through, it's going to break through like a lot. And again, whether or not the government buys Bitcoin, frankly, to me, it's kind of irrelevant in the long and short of it, right? Like at the end of the day, there's only about just over 2 million coins left to be mined. I mean, if you look at ETFs and Bitcoin treasury companies, they bought about over a million coins over the last year. So if that demand simply stays where it is, well, the price has to continue to go up 20-30% per year. So I think that people are reading too much into this. The one thing I would point out here is that I think this is a stupid move by the government, by Scott Bessent, by Trump, whoever else is involved. Like seriously, like what are you guys doing? Like the writing is on the wall, right? The only people that don't, I mean, a lot of people are going to say crypto, but I would say Bitcoin because Bitcoin's way better than anything else. Like it's not even close. Like the only people that are holding off the Bitcoin revolution are the boomers, right? I mean, and the boomers are the ones that are disproportionately in Congress and the Senate, et cetera, et cetera. But I mean, you give it, 10, 20 years, 30 years, the boomers are going to be dead, right? The boomers are going to be dead. And the question people need to ask themselves is, do you want to get with the times? Do you want to get ahead of the curve, or do you want to be behind the curve? Right? Because it's obvious Bitcoin's catching on. It's not going away. It's only gonna keep growing and growing and growing and growing. So I really don't know what they are doing here. It makes absolutely no sense. Like if the government, if they bought 1 million coins and they announced, hey, we're in the process of buying 1 million coins, I think Bitcoin could go up, 20, 30, 40, 50% that week, that day maybe even. Like you would almost certainly hit 200,000 on all just because of that announcement. It might not happen instantly, but you almost certainly would. So what is holding them back, right? Like if you buy 1 million coins and it goes up 100,000 a coin, well, that's what, 100 billion. My math might be off, but 100 billion in unrealized gains right there. So I really just don't know what they are doing. Like it makes absolutely no sense. Honestly, I think it is just the boomers that don't want to get with the times, that are just they're dinosaurs. They don't want to change. I get it, but I think that's what it is. So we'll see if they change their minds here. Frankly, I'm not going to hold my breath on this. I'm expecting them to do nothing at this point because frankly I don't know what it is that they are waiting for. Now again, they did announce on Friday that they're decreasing or reducing regulations on banks dealing with Bitcoin and crypto, which again, that's good news. I got to give them credit where credit is due there. But the one obvious criticism here that can't be ignored is they're either dragging their feet on this, or they're just taking way longer than they should on this. Now again, I'm not saying they necessarily need to buy 1 million coins, right? But at the very least, you need to find a way to buy some Bitcoin, right? Like if they can't come up with a way to say, hey, we're going to find a way to buy 100,000 coins a year, like that is the very least that they could do. At the very least, they could sell some of the gold. Like why in the world are they holding so much gold? Like again, it's not 1950. Like what are they doing? Like it really just makes no sense. Google search for altcoin hits the highest level since 2021. So this is another thing that makes me concerned, because this is something that I have seen a little bit recently, is that there's more and more of your average Joes that are getting involved in these altcoins. And this very well could be a sign of a market top, but maybe it's a sign that we're still in the middle of things. It's really tough to say, but the one thing that we do know is that the more people start getting involved with altcoins, the more concerned I get. Right? The more concerned I get, because when people who've never invested in their entire life start to become super interested in this stuff, usually it's concerning. Now, some of those people will be converted, right? Like, there was a point where I was in that camp, but most of them will not. Most of them will stay in their lane, which is the lane of, I'm going to gamble on these altcoins. I might get lucky and make a bunch of money, but chances are I'm going to lose a bunch of money. So this is definitely a little bit concerning here. Another thing that definitely has me a little bit concerned, but at the end of the day, I'm a long-term holder. I'm a long-term investor. I don't really care that much at the end of the day. And there was a little bit of earnings from this past week. As far as stocks go, I didn't really mention. The S&P was up about 1%. NASDAQ was up a little bit more than that. The S&P was up about 1.5%. The NASDAQ was up about 1%. Meg 7 just a little bit less than that. Small caps actually did the best, right? Small caps are up about 2.5%. Mid caps are up about the same as the S&P. So this was a week where small caps really outperformed, which again, I think that's just a little bit of sector rotation. This is why you always want to have exposure to small caps and mid caps, because a lot of people, they think, I'm just going to buy the S&P or the NASDAQ and forget about the rest. And it's like, sometimes small caps and mid caps outperform. Sometimes international stocks outperform. This was also a very good week for international stocks. So you want to have some international exposure. You want to have some small cap exposure, et cetera, et cetera. So there was some earnings from this past week, just a handful that I wanted to get into. The first one is Applied Materials. They beat earnings and revenue. However, they did lower guidance. They sold off big time on that news. They were down, what were they down? About almost 15%. So this is a stock I really do like. I still think it's probably a little bit overvalued. I'd say if I was just bird's eye view here, probably like $150 a share would be my fair value. If we check their historical average pricing here, they are actually slightly below their historical PE, but they're slightly above their historical price to free cash flow, slightly below their historical price to sales. So this implies that they're probably about fair value, which means I probably want to get you a little bit cheaper. So I do like this stock a lot, but I just think they're still a touch expensive. Deere is another company I have on the watch list. I've never actually bought. They beat earnings. They actually missed revenue. This is a solid company, not one that I'm head over heels for, even if it did become cheap, but I do watch it at the very least. AIT is another one I have on a watch list. I used to own. I actually sold it right before it had its big run up recently. Beat earnings and revenue. I think it's a good quality company. And then the last one here is Oklo, who's they're the company that's basically trying to revolutionize small modular reactors, which again, they have a lot of hype behind them. They still have negative earnings. They still have no revenue. So to me, this is a very, very, very risky play. I mean, they do have a very good current ratio. They have no debt, but this is a company that doesn't even have revenue yet. So to me, it's just way too risky. I mean, you take MSTR. I think that MSTR is a way better risk reward than a stock like this. I love the nuclear space. Don't get me wrong, but I don't know. Like, why would I buy this when you can buy Cameco, for example? Right? That's kind of a somewhat of a direct comparison. I would much rather have Cameco, but you're looking at a high risk, high reward. To me, MSTR is the ultimate high risk, high reward because they have a track record and they still have that high reward baked in. So that's kind of my thoughts here. I mean, if this is a company that actually starts to get some revenue and starts to grow, then I would buy it because I do love the idea of small modular reactors. The problem is it's an idea, right? And we've seen probably thousands of companies over history that had a really good idea, but it never amounted to nothing. So that's my thoughts on that. I do think it's very interesting, but that's my thoughts. So anyway, like I said at the start of the video, if you got value, please like, subscribe, comment, check out those links below, and stay tuned for more.